So far, the month of February has been good for the market. The S&P 500 continued to make record high and pushing the market participant from both sides toward the edge of the seat. Will the S&P 500 and the market break out and the bulls get euphoric? Or will the S&P 500 and the market have finally found sellers and the bulls decide to take profit? Welcome to another S&P 500 analysis. So is the S&P 500 and the market sitting on an edge? Or are they getting ready to fall off the cliff? In this video, we will analyze the price action of the S&P 500 and the other major market indexes. We'll look at the market sentiment and the market internal to see what they are telling us. In the end of this video, I will share with you on what I will be watching closely in the coming days for clues on preparing for the next S&P 500 sell-off. And since Monday is a holiday for the US market, I will post a video on Bitcoin, US dollar, gold, and silver sometime later on this weekend. So be sure to subscribe and click on that notification icon so you will be notified when this video is posted. Starting with the market sentiment chart, the VIX dipped below 20. Last time it did that was back in January of 2019. The put-call ratio is sitting near 0.5. It closed at 0.51 on Friday, and the VIX closed at 19.97. The NYSE up-down volume ratio is not showing a rush to buy or a scramble to sell. The up-down volume ratio has been fluctuating between plus and minus 2. The New York Stock Exchange daily advanced decline is indicating a lack of broad market participation during the recent record run by the S&P 500. The advancer led the decliner only by 372 on Friday, when the S&P 500 closed at a record closing high. On a slightly positive side, the new 52-week high outnumbered the new 52-week low by 235. But it is still not where it should be with the S&P 500 at a record high. It would be more positive if it is in the range of 400 to 600 more new 52-week high than new 52-week low. The NYSE cumulative advanced decline line did make another new high along with the new closing high from the S&P 500, but only modestly. Now to the Nasdaq market. A little concerning from the up-down volume ratio. Other than a strong showing on Monday, it's been contracting as the Nasdaq 100 pushes to a new high. On Thursday and Friday, the Nasdaq 100 closed at a record closing high with more down volume than up volume. Both days, the up-down volume ratio was negative. And on Thursday record close, there were more decliners than advancers. And on Friday record close, only 412 more advancers than decliners. On the new high, new low, there were only 389 more new 52-week highs than new 52-week lows on Friday's record close. Here's the troubling spot for the Nasdaq. The Nasdaq cumulative AD line failed to make a higher high, while the Nasdaq 100 closed at a new record high. Overall, the market internals are not giving us much confidence on the upside. Now let's go and look at the price action of the S&P 500. Starting with the weekly time frame, the S&P 500 ended with another positive week. It gained 48 points or 1.23%. But the range for the week had narrowed to only a little bit more than 52 points. It is still one time framing up and it closed above the 10-week and the 40-week moving average, and also continued to remain above this long-term megaphone channel. So on a weekly basis, the trend remained to be up. Now let's switch over to the daily chart. We see the S&P 500 is grinding higher along the upward channel trend line here, and it has moved above the 3,900 level. Just a refresher on these levels, this 4,060 level is the major move from this bull flag pattern, and it is projected from the top of this flag here. For next week, I'll be watching for a possible break from this price channel and come up to this 4,000 round number target and possibly surge up toward the 4,600. And that's the upside scenario. And for the downside, basically looking for a pullback toward the this small gap here near the 3875 area. And if the pullback continue, then I'd be looking for the S&P 500 to come down and fill this gap near the 3791, 3792. And that's pretty much in confluence with this lower channel trend line as well. For the Nasdaq 100, we see that it has tagged this 78.6, this 13,800 level, and this is the projected move from this consolidation area or this ascending triangle here. And basically, this is like a 80% projected move, and the 100% major move is somewhere near the 14,180. So for the coming week, I'd be watching for the NASDAQ 100 to see would it be able to continue to move up and toward this 100% major move at the 14,180. Or would it pull back? And if it pull back, then I'd be watching it for it to come back down to the lower price channel trend line near this gap here that needed to be filled somewhere around 13,363. So those are the upside and downside scenario for the NASDAQ 100 next week. For the Dow Jones Industrial, it failed to make a new high last week. It remained above this price channel lower trend line. For next week, I'd be watching to see if it could move up to the 32,000 level toward this upper channel trend line. For the downside, I'd be watching for it to pull back to this lower channel trend line near the 30,500. If it failed to hold that channel trend line, then I'd be looking for it to pull back possibly to this pivot low near the 29,856. The Dow Jones Transportation moved back into the price channel and closed the week with a new closing high. For next week, I'll be watching for a continuation move toward the 13,500. For the downside, I'll be watching it to see could it hold above this 13,000 level here. And if it could not hold above this 13,000, then I'd be looking for it to move down and possibly fill this gap near the 12,727. The Russell 2000 made a new high on Wednesday but failed to close with a new closing high last week. For next week upside scenario, I'd be watching to see would it be able to close with a new closing high while moving up toward this 2,350 level. My near-term target, the upside target, will be this 100% major move at 2334, and this is a symmetry move based on this particular swing. And for the downside, I'd be watching to see would it be able to find support near this pivot high here at 2195. In summary, we are seeing some hesitation or lack of conviction on the upside. The Russell 2000 failed to close with a new high while all the other major market indexes, with the exception of the Dow Jones Industrial, make new closing high. On the internals, we are seeing a lack of broad market participation on the upside from the daily advance and decline. Up-down volume ratio was also subpar on the upside and on the downside. These are indications the market is getting a bit tired. Now, the things I will be watching closely for clues on when the S&P 500 and the market could see a more substantial pullback in a range of 5 to 8%, or the VIX and the put-call ratio. We saw the VIX dip below 20 for the first time since January 2019. If it stays below the 20 level while the market continues to move higher, I will then watch to see if the put-call ratio is moving up toward the 0.75. When the put-call ratio is showing sign of risk-off while the VIX is showing complacency, that is the time to be very cautious. I hope you find this video to be informative. Be sure to smash the thumbs up to help me share and promote this video. Thank you for watching and stay safe.